Hey, this is Ron Janish. If you're looking for insights and information on the market right now, this is the place to be. This is the video to watch. Do suggest you kind of sit back, relax. It's on the longer side because we're going to give you just a ton and a half of information, insights, and other things. If you're looking for products to buy, I'm really not selling anything today, so let me just show you this and how this works. Recently, I saw a presentation, a wonderful presentation by a new guy in the technical analysis field, and he gave a presentation on this particular thing here, and his strategy for trading the SPY. He suggests that this is something that is used by all the big guys for managing portfolios, and it could very well be. I don't use it. I wouldn't recommend using it, and you'll see why as I go on. And what it does is it looks to buy the three hottest ETFs in the three hottest sectors after the 50-day moving average goes above the 200-day moving average, and then has specific ways for when to exit that trade, and is very particular about that. I recommend watching his video sometime and to see how he does it and his strategy for that. I think it's quite excellent. His presentation, that is. I wouldn't use it right now because I think this is the worst possible time to use it. Anyway, but it has worked incredibly well in a 14-year bull market. And if we go into another massive bull market, then it'll probably do incredibly well. Okay? So, without any further ado, let me move on to something else. I'm going to show you what I do use and why and other stuff like that. Okay, one of the things I really like is what I call the triple play strategy. and what we know is we know that most traders will use a specific reversal point, the market reversing at a specific reversal point, kind of like going back here to where the intersection of the old ML and this reverse 2P line is, right? Or they might use a breakaway, kind of like, price is breaking below this trend line here, or breaking below the moving average line. Okay, they might use that. Another thing that traders might use for an entry is a pullback technique. So they'd be looking for prices to do that break of some kind and then pulling back. And perhaps it would be to this area here where the prices pulled back to the median line area and the multiple pivot line area, right? But notice that you have what I call the triple play. You have all three here. And when you have all three, especially with Andrew's techniques, you have something very interesting and very useful. And so this is Bitcoin, BTC, right? And this has got a pretty good chance of continuing the downside move. What is going up, ironically, is Ethereum. And one of the reasons is Ethereum is actually incredibly useful in a commercial or industrial setting versus Bitcoin, which is primarily useful for a pirate chest setting, if you will. Bitcoin is useful for people who are pirates or scoundrels, any scoundrels in some sort, who make a bunch of money and want to put it someplace, or even have their money transferred in Bitcoin. Where Ethereum is something that is actually used in the wonderful world of blockchain for transactions. And the other thing that's probably most important is Ethereum is efficient, or much more efficient than Bitcoin, meaning that when you have a transaction with Ethereum, you use a certain amount of electricity. And the amount of electricity that one transaction uses in Bitcoin is massively higher than what is used with Ethereum. Okay, so that's to put it as straightforward and simple as possible. Now, so since I don't use something like this band trading strategy here, which by the way has performed wonderfully in a 14-year bull market compared to the S&P, is because I use something else. I'm more of a bop. As you can see here, I'm more interested in getting in at very safe entry points like this here. And these patterns occur all over the place. It's just standard stuff. And so I look for specific pattern things. And here's a wonderful example. The other day I sent this out, and notice here, that I'm long TECS, and I'm long TECS and QID and PSQ. Now, what they all have in common, those three ETFs, is they are all members of the same group, and they are all members of the inverse tech sector group. So, in other words, they're ultra short stocks that focus on the tech sector. Okay, and as you can see here, this was the other day where my actual portfolio, and this is a test portfolio we're running here. We're using real money and testing out a specific technique that eventually is going to be all beautifully softwareized and stuff. And this is all, good old Andrew stuff. So, for example, we went long TECS back earlier this week. And let's see, TECS at 601 was down here. Okay, so one of the things that we're looking for is that we're not looking for breakouts past this 50-day over the 200-day moving average, like the band strategy does. We'd be more apt to buy something that is within the last few days or the last 1% of the move for the year. So if you look at the chart in front of you here, this is the chart of TECS, which is the inverted ETF of the Qs or the tech sector, and this has been going down for pretty much the whole year, if not the last 14 years. Okay, so that's what we're looking for. We're looking for buying things like that. And the reason is risk. Not because we're fabulous or anything, but it's because we really like to mitigate risk. And as you look at this pattern here, if you're knowledgeable with my techniques, you'll instantly notice that this is what I call a Tom pattern, okay? Or Tom's favorite. And so one of the things I look for is I have the scanning mechanism, and I simply go in there and scan, looking for stocks that are near the yearly low or something like that, and then a few other things, and then look for signals with groups. Okay, because I like to see groups of stocks or groups of ETFs that have a signal around the same time. So that's what I like to see, and it's kind of interesting to trade that. Then the other thing I'll look for is unique opportunities. And so I had a buy signal in this one here, for example. This is a monthly chart, as you can see, that right here were the lows for at that time for the last couple of years in this particular stock, the UZI. And this particular stock, when this gave a buy signal, I looked up to see what the heck do these guys do, and it was they build smart glasses of some sort. And what's interesting about this company, to me, that struck my attention was that they have a ton of patents. So if you ever watch Shark Tank, one of the things that Kevin likes to see are lots of patents on whatever it is that you sell. And so they have a ton of patents. And so when the price was down here, before the pandemic hit and brought it even lower, we had a buy signal, and we just sat in there and bought it. And even with the pandemic, I stayed in there and wound up selling up here somewhere. And if you look at a daily chart, and if you're a course member, you'll know why I wound up selling up here. And I had a lot of stocks up here, a lot of shares of this thing here, because they were so cheap. They were so dirt cheap down here. And if you're a member of the Andrews Babson email group, which is free, by the way, it's a Google group, Andrews Babson, googlegroups.com or whatever that is. You would have seen that I bought this particular stock, and I named it to the group what I was long and why. Okay, way back then. Okay, now let's move on. So one of the things I use for stocks is that the special opportunity, and I look for the groups. Okay, now when it comes to let's look at this one here. One of the other things I like to work on is this system for futures trading. And what this does is it gives me trades that last typically less than a week, but more than a few hours. Okay, they're typically going to last less than a week. And what we did was we did something rather unique. When we developed the system, we took the intraday pattern and we used that to generate buy and sell signals. And then what we did was we looked at the pattern on the daily when we had that buy signal, and we were able to put that pattern into one of 4 different categories. And this is based on stuff that's taught in the Andrews course. Give you a hint, one of the categories is what's called an SO or shakeout. And what we found was that one of those categories gave amazing results, and one of them gave absolutely dismal results. Opposite, it was OPSO, which is opposite of a shakeout. Those were absolutely dismal. So that was D, and we had A, B, C, D. And what we did was we just kept the A's. And so about 6 months ago, a year ago or so, we put this information out there and let people know. And we put up a video on it, and just take a look and see what has it done in the last year. Well, this is the entire run on it, and a year ago would have been over here. And these are only the A's. Okay, we had A, B, C, D. A was amazing, B, C, D. And remember, D was dismal, and the dismal signals were also OPSOs, which is opposite of a shakeout, right? So, and Andrews tells you not to shake. It doesn't tell you to buy opposite of a shakeout, by the way. It absolutely doesn't. We just happen to put that in as a category. So what we're looking at doing is taking this here and putting this in some handy-dandy software. And then when you have it in software, the benefit is that the software can then go and test it out. And it can do the test on all kinds of different time frames and all that kind of stuff. And it's real easy to modify and test stuff when we put it into some software. Okay. So we've got that. Let's move back. Oh yeah. Now here's what's interesting about that. Okay. So you see this chart here, right? And this is, about 20 or so futures contracts, and you can see some of the different trades that this system had. And by the way, I don't do the historical testing on this. Somebody who lives a good 5-6 hours away does that at their location. This chart here is the last year in the same, using the same system, but it focuses only upon currency groups, the currencies. So you can see here the euro, the Aussie, the Swiss, stuff like that, Canadian dollar, and also focuses on a form of what I call a form of currency known as crude oil. Okay, and so when we came out with this idea or published it about a year ago, this system was over here in this area here, and it's done this much here. Now, what I'm suggesting is that this technology can be used for something that's called a stable coin. And a stable coin is where you have one of those Bitcoin type things based on Ethereum in this case. And what it would do is it would allow you the ability to buy and sell using these digital coins. And the digital coin would always stay at a constant value and may even once in a while spit out some interest. And I would suggest that it would be FDIC insured. Now, in order to make this FDIC insured, you got to pay FDIC, and they take a good chunk of change. So what you do is with the underlying assets of the stable coin itself, what you do is you invest in a small amount in these things here. It might be Swissy or Euro, or there are various currencies, really. And you shift a small amount of your assets into that so that at the end of the year, you have a sort of profit, if you will, of maybe 5 to 15%. Worst case 15%, but it more likely be around 5 because we don't want to take a lot of risk when we do this. And so this was suggested, and I wrote something up on it when this particular model was right around here, and we can see that it's done rather nicely since then. Okay, so let's moving on. Okay, and this is the model on all the different things. Okay. And here's the latest and greatest that we're working on. So as I mentioned, we've got something for stocks, and these are, with stocks, you're in a position for months, if not years sometimes, right? And then there's futures, and some of those are currency futures and or even Forex, and you're in those positions for usually less than a week. Well, here's something that is really laser focused, and really like the idea of only being in YM, which, as you know, is the is the Dow Jones, and ES, which is the S&P. Okay, and these are so we had Matt went and did the test on this, and this is what he came up with, because there's kind of the joke around here. I have this friend, and he says, "Oh, well, I do testing, and I've got 10 people a day that want me to do tests on their system and run those tests and stuff like that." So what I said to my buddy Sam was, "Look, I don't have that luxury. If I come up with a system and send it over to Matt, he wants me to kind of know that it's going to make money first before he even spends his time with it. So we don't do a whole lot of super experimental stuff around here. So Matt only likes to test out stuff that's actually going to work, or only needs minor improvement to do something reasonably well. And this is an example of a system that he recently tested out. And basically what it does is it looks at the market in the morning and says, well, do I want to make a trade? And is it going to be long or short? And it'll at the most make one trade a day in YM or ES or both. And it'll do it early in the morning and then usually be out easily by the end of the day. Okay, and sometimes it makes very little, sometimes it loses some money. I mean, you can see the little red things here, and those are the losses. Okay, and you see the drawdown is not horrendous, and quite often it makes some decent money. So that's the latest and the greatest of what we're doing. And just a little side note here: I had a conversation with one of the smartest people I know. And he said to me, we're talking about the stock market, and he thinks, hey, we're in a 14-year bull run that's going to continue for a while. And then he says to me in that conversation, he says, and by the way, J.P. Morgan, who, everybody who's smart worships the ground they walk on, is looking for the stock market to continue up for the next few years, or forever, going up forever. And my response to that was, oh my God. That instantly took the air out of the balloon in terms of my trust for J.P. Morgan, because we all know markets don't go up forever. Okay, so that's in a little aside here. What we are looking at doing is taking all these different technologies, putting them into some new software. We have found someone who we know, based on his past experience, can do this programming and do it rather well. And we're going to be looking to raise the money to pay for that particular project. And that's going to be a good sum of money. We looked at a number of $650K, even though it'll probably be less than that. On the outside, what's it going to cost, and looking at the time factor, and it can all be done with the right staff on board in less than a year, and maybe even 6 months. And so that's what we're looking at. And hope I've given you some interesting insights. And if you feel a need to go through here again and look at some of the specifics, please do. And thank you very much. Bye.